Welcome back. You've joined us in the newsroom right here on ET Now, and let's put the spotlight on the new kid on the block then, MV Photovoltaic Power. It was a flat listing, but the stock has now recovered from the lowest point of the day. And to understand what the outlook is going forward, we now have Mr. Suhash Donthi, whole-time director, CEO and president at MV Photovoltaic Power, now joining us. Mr. Donthi, afternoon, and first of all, congratulations on getting listed on the bourses today. And first up, let's talk about, now that you're a listed company, you can also talk about your growth outlook. And over the last 2 years, I was just going through your financials. You've reported solid growth, about 145% revenue growth in FY24, in FY25, and 54% growth a year earlier. What is your target now? Do you aim to sustain the growth momentum?
Absolutely. Thank you very much for having me here and also congratulating me. It is wonderful to be a part of the Indian capital markets, and at MV we are very excited. So, as you rightly pointed out, our growth has been phenomenal. We have showcased time and again the increase of capabilities that MV has brought in terms of manufacturing. We have increased our capacities, and that is backed by the revenue increase from 618 crores to 2,336 crores in the last 3 years. And if you see our Q1 revenue, that is, we have already achieved half of what we had done for the entire year last year in first quarter itself. So this is the growth the company has been showing, where we are not only expanding capacities, but we are also showing results that is backing that capacity.
Okay, so the outlook is very positive, and we'll talk about the capacity expansion plans in just a bit. But before that, Mr. Dhonti, you've also raised funds for paring down your debt. If you can tell us now, with IPO proceeds, where does your debt profile stand, and what will your deleveraging plan be now going forward?
Yeah, absolutely. So we had you know we're right now with these IPO proceed, we are paying down 1621 crores of debt, and that is the long term debt, that is that outstanding debt that was in the balance sheet. So the debt that we would remain is very low.
Okay. Let's also talk about your capacity expansion plans, whether it's for solar PV module capacity or solar cell capacity. You have quite ambitious plans going forward. Will that impact your debt? How will those capex plans be funded?
Sure. So yeah, we have taken our expansion plans are, as I said, we are going to 16.3 gigawatt of module manufacturing capacity with 7.8 gigawatt of manufacturing capacity today. We're adding another 2.5 gigawatt that is coming up in this year, and another 6 gigawatt that is going to come up in by the first quarter of 2028. And similarly, the cell capacity of 6 gigawatt that is going to bring us to 8.9 gigawatt by the first quarter of 2028. This is the expansion plan the company has, and the cost for this expansion of integrated capacity of 6 gigawatt cell and module is going to be 5,500 crores, out of which it is going to be 60% that is funded through debt, that is 3,300 crores, and another balance is going to be from the internal accruals of the company. And you are seeing the current run rate of profits and EBITDA the company is doing today with a PAT of 187 crores in the just first quarter of this financial year, with the current expansions and the backward integration that the company has done in the last year. We are in a very comfortable position.
Understood. And Mr. Dhonti, you also generate some amount of your revenue from export markets, especially the US. If you can tell us, are you facing any impact of US tariff uncertainty? And if at all a deal is signed between India and US, will that open up opportunity yet again for you?
So the MV has been extremely nimble when it comes to its markets. In 2006, when we started, we're a manufacturer that's been doing solar PV modules for 18 years now. So in 2006, when we started manufacturing, there was no market that was available for us. Not much market was available, right? So for us, the natural choice was Europe. That was there for us, and we exported 100% of our production to Europe. And later on, we started focusing on the Indian sector when India started picking up its installation capabilities for solar. And similarly, like as we speak today, there has been many situations such as this, and MV exported 30% of its revenue to the US in 2023. But we were able to again be nimble and focus on the domestic market, with our current order book being 100% domestic and having a 0% exposure to the US. But yet again, the company is extremely been quite nimble and have the sales force and teams to address the markets that are right at the right times.
Okay, so the focus continues to be on the domestic market, at least for the time being, and you don't have any exposure to the US market. Let's also talk about your EBITDA margins, and they expanded substantially to 31%. And as compared to your industry and peers, it is very solid. Will you be able to maintain the 31% EBITDA margin that you recorded in FY25, or could competition weigh heavy on your margin profile?
So, as I was saying, that our module manufacturing capabilities, we have shown consistent EBITDA margins for the last many years now, irrespective of many cycles that have come in the highs and lows of the company. And similarly, by backward integrating into cells and by proving that the company can manufacture cells, and showing in our results that the EBITDA rose from 12.7% to 31% in FY25, and further increased to 33% in Q1 of 2026. So these are the levels that is backed by real backward integration. And as the company is further adding cell capacities, we hope to continue to keep it at this rate.
Okay, so the outlook is very positive. You have expansion plans, Mr. Dhonti. Now that you're a listed company, we'll keep interacting with you quite often. Thank you so much for taking time out and joining us here today on ET Now.
Thank you very much for having me here.
All right, let's